Hey you, thank you for tuning into the Above Board podcast today. However and wherever this episode is finding you, I hope today's conversation is a useful one for you. Now, I want to open up with just a brief story of a conversation that I had with a neighbor of mine the other day. And I was out front playing with the kids and he was out walking his dog. And he just kind of opened up the conversation by saying, "Hey, John, the stock market's really stressing me out. Is it worrying you?" To which I shared, "No, I'm not worried." And then the follow-up comment that he made was that he had been planning on retiring this year, but instead the markets are forcing him to continue to work for at least the next few years. And honestly, I was perplexed by that response. And so I wanted to just kind of lean into that and ask a few more qualifying questions. And ultimately, it came down to some uncertainty that's been created by the stock market reactions and volatility to tariffs and some geopolitical events. Now, I'm not going to do an economic update on this podcast today. We have Mike on our team who does a heck of a lot better job than I do on those things. So if you really want to learn more about that, I'll share with you in a minute what we're doing. But I felt so much compassion for my neighbor, hearing that this economic news and then the stock market reaction to it was causing him to forego his retirement. And not by a little bit, not by a few months or until the end of the summer or the end of the year. We're talking for the foreseeable future. I mean, for the next few years was the comment. And for context, by the way, and this is some of what I shared with him and was hopeful that the conversation resonated. The S&P 500, as I'm recording this today, which is I'm recording this on Monday, March 24th, 2025. The S&P 500 is down 2.18% year to date as I record this. 2.18%. That is hardly worth abandoning your life strategy over. And just to put things into perspective, we experience a 10% or more market correction roughly every 2 years. We go through a bear market every 6 years, which is from high to low. A bear market is defined as a 20% or more decline in a major index from the highest point to the lowest point. So we go through a bear market every 6 years, and a recession on average happens about every 7 years. Now, yes, going through market volatility, it feels like very scary at times. But if we replace tariffs, which is the topic at hand currently, with COVID, inflation, rising interest rates, the debt ceiling, a war, geopolitical tensions. I just named 6 things, by the way. All of that has happened in the last 5 years. So there's always the face of distraction is going to change, but there's always going to be something causing uncertainty in the markets and causing turmoil for us. And I hate to use the stock market to make life lessons, but the proof is in the pudding. You have to wake up, show up, and control what you can control. Which, if I'm being honest, it's not very much. There's not much you can control in your life. Can you control if it rains today? Can you control if there's bad traffic on your way to work? What about if your child decides they want to drop out of college, even though you really want them to go get a degree in finance? No, and no. You can't control any of those things, but you can prepare for bad weather. We have windshield wipers and umbrellas for that. You can leave the house earlier to avoid being late for traffic. You could find a new route or a pattern to get an alternate route to get to work if you need to. The point is, I think that we complain and we worry about all these external factors. And yes, the markets do affect you. It's your money. I mean, it very much affects you, but you still can't control the outcome of the stock market. So guess what I'm going to say next? Just like you can bring an umbrella if it rains, or you can take an alternate route for traffic, with your money, you have a rainy day fund. It looks like having an emergency fund, or it looks like being prepared by having the right mix of stocks and bonds so that you can manage volatility and the expectations and the feelings that come up with volatility instead of just reacting to bad news. Now, don't get me wrong. I actually think it's very cathartic to talk through these feelings with someone. I actually also think it's necessary to kind of hear out loud and just bounce this conversation off of somebody else that you trust, of what your fears are and what your goals are and what concerns you and keeps you up at night about money. When it comes to your money, I think at the very least doing this will at least maybe help you figure out what risk you're comfortable with taking, because there's nothing worse than realizing that your money strategy isn't aligning with your goals, your value, or your risk tolerance. And like maybe as I'm talking through this today on this short podcast, maybe that's just it. Like a market correction or a bit of volatility can just jolt us and wake us up. It's kind of like the check engine light on your car. Like everything's fine until it's not one day. And that check engine light comes on, and hopefully you don't drive around, with that on for like 6 months like I've done in the past. But apparently, I don't know, I was comfortable with taking the risk. By the way, side note, does anybody else drink their coffee in an open coffee mug while they're driving? I got into a debate last week with friends about this. And Jackie joked that this was like my version of being like a wild risk taker in life. And so I know that sounds like such a risk taker, I know. But anyway, as I digress, as we're wrapping up this conversation today, my hope is to just give a little bit of context. I'm not here to tell you everything's going to be okay or that tariffs won't negatively affect the economy, but I am here to remind you of all the other times when we didn't think things would be okay and it was okay. In fact, I'm going to argue that it turned out more than okay. If you go back to since the Great Recession of 2008, since that low point of the market, which happened around March of 2009, the markets are up. The S&P 500 is up over 700%. Now, I vividly remember listening to economists back then, and this economist said that it would take well over a decade to recover. The stock market recovered by 2012. And so again, context. I just want to help folks just kind of rationalize some of this stuff, because at the beginning of this podcast, when I share with you that we go through a market correction statistically on average every 2 years, we go through a bear market every 6 years and a recession every 7. If you're thinking about retiring in the next couple of years, let's say, even if you're going to retire soon, let's say you retire at 65 years old, hopefully that's 30 plus years of living and life and joy and things that you're going to be doing in that time. So if you're going to live for the next 30 years, you're going to go through a market correction, I guess on average, if it's every 2 years, that means 15 of those next 30 years, you're going to go through a market correction. So just want to try to give a little perspective around this. And that's what I hope to do in the conversation with my neighbor and my friend last week and with you all today. So for those of you that are looking to get a little more tactical on this, if you want some insights on what we're doing with our clients during this climate, I encourage you to attend our live virtual economic update. It's going to be on April 9th at noon. You're going to hear from our head of investments, Michael Scott, along with your above board co-host, Matthew Marcoux. They're going to talk tariffs. They're going to break down the market volatility that's happened, the economic outlook, and the political climate. All of this in about 30 to 45 minutes. So it's short and it's packed with a lot of information. There's going to be a live Q&A for you to ask questions along the way as well. So if you want to RSVP to this, follow us on social at CandorPath. You can also DM us on social, and we'll share the Zoom webinar link for you there. As always, thank you for joining me on the Above Board podcast. We love having these conversations, and sometimes we love coming on here and talking about how the stock market relates to life, which I enjoy doing from time to time. So again, thank you for joining. We'll see you next week.